Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your metals market update for this Tuesday, the 8th of August, 2017, and we're about 2:20 p.m. Central Daylight Time. So we've got the gold market under the, if you will, on the ringer right now, dropping. It closed in the 1260, 270 area, but it's down from there as we're getting later in the day. The dollar's had a bit of a bid all day, but it's nowhere near the highs. Silver is finally gaining back on the gold, and this copper market doesn't back off. And the copper's not backing off because the trade numbers that are still coming out of China look pretty darn good. They did not export as much, they didn't import as much, and that will cause some people some problems, but they're doing an awful lot. And it appears to me that from what I'm looking at in those trade data, I think there's a lot of infrastructure going on there, and the copper is getting a bid off of that. Platinum and palladium up a bit today as well. We come to the end today of the two-day meeting in Abu Dhabi. I have not seen yet what the formal communique at the end comes out to say, but on Reuters there was an interesting story about the committee actually dressing down Iraq, the UAE, Malaysia, and Kazakhstan, I think it was. And these are the countries that are nowhere near meeting their production quota cuts. And give you an example, I believe Iraq's only done 29% of what they had agreed to do. UAE, 60%, if I'm correct. So these are not meeting the numbers, and obviously the Saudis are really upset with it for a reason. They got Aramco coming, so their IPO. So you got to worry about that. But in the gold, if you take a look at the weekly chart, you're still going nowhere. And you're just hanging around this 18-week moving average of closes. That's 1255. The last quote right now, I believe that's the August contract, is 1255.10. So you're just sitting literally right there waiting for whatever it's going to do next. The final close was 1262.60. I wrote that in before we did this. And yes, the market is right now down under that by another $2.60. But at the end of the day, I'll bet you anything that the settlement price is this number. And that's because they've already determined it, not because I'm smart. When you look at the daily bar chart, you can see that you're having a big outside day down today. So today's high, if you believe in outside days, becomes a very important day in that it should not be taken out either on Wednesday or Thursday. If it is, then this becomes what I call a bear trap, and I would have an immediate target of 1280, the most recent high, as a goal as the market tries to catch the people that got short here. Conversely, let's assume it's not taken out. That means that the market's trying to build momentum to the downside, and you get to see this. Let me put this on with the swing line. I move my swing line number there at this point, and as long as tomorrow you don't take that out, it will stay there regardless of what happens after that. The market has fallen into the support level of the 18 and the 100-day average of closes, and as I just said, we know that settlement's going to be 1262.60, so it's going to be right there. That doesn't mean it can't reopen lower tonight and get back down and even make a new low, but you're in that general zone at this point. When you look at Bollinger Bands, they're far away, so they're not in play just yet. Take out this high of today and they become in play here. On the downside, well, you'd have to get more of a break going, but if you got it, 1236.20 could be the next number. And momentum, when you lost the embedded reading, has turned down. So what do we have? We have a market, because of where it's settled, is going to still have upside bias. The chart action has turned bearish, and momentum is going to be down. When I go to the GLD, the ETF, the market has now lower highs, lower lows. The market is fighting its battle right against its 18-day average of closes. It got down to 118.97, got through the 100-day average and bounced back up. But like the futures market, the trend is down. The bias is up at this point because you're over that 18-day average and momentum is pointing down. When we come to GDX, the gold miners, this is a clearer chart. This says lower highs, lower lows, bias down because you're under the 18-day average, momentum down, and the only thing that it has going for it, if you wanted to say, is it overdone to the short side? Yes. These numbers are nowhere near embedding, so they're just oversold. Could this market extend its break to the lower Bollinger Band? Absolutely. Why not? What would end the downtrend? Taking out today's highs of 22.43. So the trend's down, the bias down, momentum down, but oversold. The gold-silver ratio looks like it peaked, and it peaked right up here at the 77.40 level yesterday, and now the market's trading at approximately 76.58, but it's still in an upthrust. This is just a correction after that run. The silver market, as you can see, is up versus the gold today, and it ran into resistance right at that line in the sand, that 18-day average of closes. The pattern is what? Lower highs, lower lows, bearish. Bias is down, momentum is still down, not quite oversold. The reading is still over 30. So everything's still looking on the bear camp in that market. The copper market's got the embedded bullish reading, number one. Number two, higher lows, higher highs, bullish. Target, if it continues to rally, might be the upper Bollinger Band. And what you don't want to see if you're a bull is getting that red to get back under 80. End of discussion. Other than that, this market's still acting very, very good. Platinum market, embedded reading, hit the upper Bollinger Band and has gotten thrown back ever since hitting it. That number came in at 975.30 or 971.90, so the market has backed off from there, and that's what you would expect. You know, when you get over or up to these Bollinger Bands, you're looking for an event that normally throws the market back to the other side of it. Palladium market made its run just missing the upper Bollinger Band. You got to, that number would have been 895.56. You hit 355. You're in the ballpark. You're overbought. This is where I think some smart money's probably lightening the position up, wanting to see what happens. And everybody's probably looking at the dollar also, which has lost its embedded reading. And if you lose it, what's the goal? The 18-day average of closes. And as you can see, it backed away, hadn't hit it, and magically goes to it today, stopped literally right against it, and that's what we look at. So these are the important things as I see them. And what I do in the mornings is I review 40 charts for you to get your day going. Now, the reason I do it at 8:30, by then I've got the meat markets open, the grains have reopened, and there's a lot of trade opportunities. So what I throw out is I go in and I review 40 charts, and I'm just talking. There's no script. Believe me, I'm not in the videos. I'm recording my screen. You're seeing the chart. I'm working my cursor, and I'm showing you overbought, where the market's at, what I think the pros are going to do. I think they're going to buy or sell here. Here's where they probably have their stop, or they'll be out if they lose this setting on the chart. And I'm pointing you to different areas. Pivot points. I used pivot points today in a trade, in fact, in the Japanese yen. But I show these different parts and parcels. So if you're part of my research, you're really getting a lot. If not, you'd like to try it, well, I offer a 20-day free trial to it, which is basically a business month. Simply call us, go to our website. You can always click up here if you're watching me on YouTube, or underneath us on many websites it says, click here for Ira's free offers. Do so, and I'll get everything to you. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow. Take care now.